Good morning and namaskar, my dear friends. Today we are going to talk about a Tata Group company, one of the oldest, Tata Chemicals Limited. Tata Chemicals Limited is a manufacturer of inorganic chemistry products, and its plants are spread over four continents: America, Europe, Africa, and Asia. It's the world's largest soda ash factory and India's leading vacuum evaporated iodized salt producer. Their salt works are spread over 36,000 acres and are the largest in Asia. Of course, these salt works are producing iodized salt, and it is being supplied to Tata Consumer Products for sale. Now, Tata Chemicals Limited produces soda ash using synthetic and natural mining process. Of this, 3/4 capacity consists of natural soda ash, allowing significant cost competitiveness. Now, as I said, its footprint is across four different continents. Africa is there, North America is there, Europe is there, and India, that is, of course, Asia is there. In Africa, it is in Kenya. In North America, it is there in US. In Europe, it is there in UK. Now, it's employing over 5,000 people. There are 13 manufacturing units supported by 3 R&D centers with 200 plus scientists. Let us look at the management. R. Mukundan is the Managing Director and CEO of Tata Chemicals Limited. He is stationed in India. Now, Subodh Srivastav is the MD of Tata Chemicals at Magadi unit, which is in Kenya, Africa. Dr. Martin Ashcroft is MD of TCL Europe, that is in UK. John Mulhall is MD of TCL in North America. And it has got a subsidiary called Rallis India, Rallis. Sanjeev Lal is the MD of Rallis. Now, in FY20, Tata Chemicals Limited demerged its consumer products business to Tata Consumer Products Limited via a share swap transaction. So now it's not dealing in salt directly. Salt is now going to Tata Consumer Limited. The consumer products business consists of vacuum evaporated edible common salt for human consumption. Then consumer products, therefore, apart from salt, it is dealing in spices, protein foods, and certain other food products. The demerger helps Tata Consumer Limited to focus on chemical products. Two types of chemical products are there: basic chemicals, which constitute 75% of the revenue, and specialty chemicals, which contributes 25% of the revenue. Basic chemicals are high volume products but low value products. They give 75% of the revenue, and they cater to a wide range of industries, downstream industries, and manufacturing inorganic chemistry products. Of the basic chemicals, soda ash is one of the largest product segments. It gives 56% of the revenue. Then comes sodium bicarbonate, which gives 4% of the revenue. Sodium bicarbonate is used in food additives, animal feed, pharmaceuticals, dyes, textiles, air pollution control, and many more. Then salt, 11.5% of the revenue. But the salt is sold by Tata Consumer Products. So then, see, there are waste products coming from soda ash manufacture, and those waste products, for using that, Tata Chemicals has started a Tata Cement manufacturing unit. So it is called Tata Shuddh PPC. It has captured 4% market share in the busy state of Gujarat, and the demand is rising and it is expanding also. So this constitutes basic chemicals. Now comes specialty chemicals, which contributes 25% of the revenue. So in specialty chemicals, there are agrosciences contributing to 16.5% of the revenue. Here in agroscience, crop chemical business is there, which is dealt with through subsidiary called Rallis India. Then nutritional sciences. So nutritional sciences business, it manufactures so many things, backed by ingredient and formulation solutions, marketed under the brand name Tata NQ, catering to animal health and human health also. So after natural nutritional sciences comes material sciences. So here silica products, precipitated silica products are manufactured for use in tire manufacturers and certain other non-tire groups also. Then comes energy sciences. The energy sciences is a growing business. Lithium ion cells are manufactured in this segment, and lithium ion cells are a major component in the electric vehicle batteries. Now about the geographical segmentation, we have talked about. Here 65% of the revenue comes from American continent, whereas 25% comes from India, and balance 10% comes from Europe and Africa. Lot of expansions are going on now. It's a continuous process. Therefore, you can always expect more and more products and more sales, and therefore more and more profits also. Its current market cap is 28,294 crores. Current price is around 1,100 odd. The 52-week high is 1,182. Low is 773. The price earning ratio is around 18 point, which is normal. Book value is 716. Dividend yield is 1.13%, not low, not high. ROC is about 40%. ROE is about 7.58%. Face value is 10 rupees. The company has been maintaining a healthy dividend payout of about 43%. But sales growth has not been very great during the last 5 years. And of that also, Tata Consumer Division has taken away the salt business, and now the TCL is again growing. Now, if you have to compare with some of the peers in chemical industry, We can compare with Aarti Industries, I suppose. Aarti Industries has got current market price is around 800 and something like that, whereas Tata the 1111 something like that. Price earning is 22 Aarti Industries, but only 18 for Tata Chemicals. Market cap is 29,332 for Aarti Industries, whereas 28,294, approximately same. Tata Chemical and Aarti Industries market cap is around the same. Net profit is Aarti Industries 189, whereas Tata Chemicals is 589. Goes on like that. ROCE, if you come to it, Aarti Industries has a high ROCE of 23, whereas Tata Chemicals ROCE is hardly 8. Of course, I expect it to improve in the quarters to come. Let us take a look at the quarterly results of the last 5 quarters. Sales were 2,978 in Q1 last year. It improved to 3,000 in Q2, improved to 3,142 in Q3, 3,481 in Q4, and in Q1 latest 3,995. There has been progress. Can we say it is spectacular progress? Not yet. I think the best is yet to come in Tata Chemicals. Operating profit has improved from 601 to 1,011. Not bad. Operating profit margin has improved from 20% to 25%. Net profit has improved from 288 to 589. That is somewhat impressive. Net profit improvement is from 288 to 589. EPS follows suit, 11.3 to 23.12 on a face value of rupees 10. Now, from these results, what we see is revenue has gone up by 1,017 crores in the last 5 quarters. That is 34% year on year. EBITDA has gone up by 414 crores. That is 69%. Profit after tax has gone up by 229 crores. That is 87%. Now, if you look at the annual profit and loss account for the last 5 periods, I am not saying 5 years, 4 years and the trailing 12 months. Sales has improved from 10,337 crores in March 2019 to 13,640 in the trailing 12 months. The improvement is actually in March 22 and trailing 12 months. Operating profit has improved from 1,799 to 2,689, all in crores. Operating profit margin has improved from 17% to 20%. Net profit has improved from 1,156 to 1,558. Operating profit margin okay, but net profit improvement is marginal only. 1,100 to 1,500 is not very great. We expect much better things from Tata Chemicals in the quarters to come. Dividend payout is around 28% in March 19, and last year it was 25%. Not bad. Sales growth has been a little muted in the last 5 years, but in the last trailing 12 months, it is very good, 26%. So I am expecting if it maintains the same growth rate as in the trailing 12 months, it will be a big show. The return on equity is also not very great, 8%, but I hope TCL will improve further. Now, if you take a look at the balance sheet, share capital is around 255 crores. Reserves have improved from 10,000 crores to 18,000 crores. Borrowings approximately same, 6,108 crores in March 18, 7,025 crores in March 22. So they're not gone up much. Debt is under control. Cash flows are okay. Cash from investing activities, there 817 crores last year also, which means expansions are going on. Now, if you see the shareholding, promoters hold 37.98%, FIS hold 14.99%, DIIs hold 19.14%, government also holds 0.03%, public hold 27.86%. So this is healthy. Shareholding ratio is healthy. Now, what about the prospects and future highlights, etc.? The soda ash demand is very robust across all geographies and across all applications. Soda ash applications are going up wonderfully. One of the major things is in production of glass. Now, solar panels are increasing everywhere. I think, these solar panels can be allowed on every household top. In many cities it is there, but in many other places it is not there. Neither the state governments are producing, nor they are allowing the solar panels freely. If that is allowed, the demand for glass, demand for soda ash will improve. And it will improve. Energy costs are slightly high. But last trailing 12 months, strong revenue, EBITDA growth, net profit growth, etc. was there, even though input costs were challenging. Debt. Last quarter also some $30 million has been repaid. Other energy costs are also at elevated levels like gas, coal and freight of coal, etc. are at a elevated level. Now, if you look at the Mithapur unit in India is operating at full capacity now. Higher soda ash realizations, bicarbonate realizations, they are helping the company a lot. EBITDA improvement is there. Now, if you look at the USA factory, overall US volumes are remaining strong, and growth in its domestic and export markets are very promising. Export prices remain strong and above the pre-COVID levels. There was maintenance shutdown in one dryer unit, leading to 10,000 metric tons million tons production loss. Gas prices remain at elevated levels, and in USA only $30 million has been repaid debt. UK EBITDA improvement is there, but marginally lower volumes in Q1. Kenya operation is a steady performer. It is improving slowly. Rallies, higher revenues in India driven by robust growth in crop care. Rallies is mainly catering to agriculture, crops, seeds. Margins are somewhat impacted due to inflation, competitive pricing, etc. Crop care margins have improved, but seed margins are dull. So this is the overall situation of Tata Chemicals Limited in Q1. But overall results you have seen, they have improved. Coming days are also likely to be bright for TCM. Now listen to this 2 or 3 times and then take your decisions. It's a good company, the management is strong, good performer, so dependable. It's not going to fail you. It may be a multi-bagger or may not be a multi-bagger, we don't know, but it will be a steady performer, a good compounder. So consider all these points and then take your decisions. I will be back with you with another good company. Thank you.